Welcome back to the presentation for chapter number 4. This is the fourth part of the presentation that we are doing. As you can see, we have already completed some of these steps. We have analyzed and journalized the transaction in a general journal, posted those general journal entries into the ledger accounts, prepared an unadjusted trial balance, and then, of course, we have also started the worksheet, populated the unadjusted trial balance. Now, the next step is to journalize and post the adjusting entries. Now, what we are going to do is first we are going to journalize the transactions in the adjusting journals and then post those journals back to the ledger that we have already opened in step number 3. So, that is the next thing that we are going to do. So, let me show how you will be doing that. Let's go ahead and read the problem. Uh, we are currently handling requirement number 4. At the end of July, the following adjustments data were assembled. Analyze and use this data to complete parts 5 and 6. So that is what we are going to do. So first, let's do the adjusting journal entries. Now, as you can see, all these adjusting entries will be done as of July 31st. And the first journal entry that is required to be done is, it says number A, insurance expired during July is 375. So the insurance has expired, and that is what we are looking at. So whenever the insurance is expired, we consider that as an insurance expense. So let's debit insurance expense, and then of course we'll be crediting the prepaid insurance, and then amount is going to be 375. So that is the first journal entry. Again, the insurance has expired to the extent of 375. Any expired insurance will be treated as an expense and hence debited. And we need to take out that money out of the prepaid insurance. So that's why we'll be crediting the prepaid insurance. So now let us take another problem, that is number B. It says supply on hand July is 1525. Now what we need to do is we need to go back and check our supplies account. So let's go back to our supplies account in the ledger. So the supplies account was number 14, and it says we had a balance of 3,800. So if it is 3,800, now it is worth only 1,525. So how much of supplies have been used? It would be 2,275. So let's do the journal entry with that. That is, the supplies expense would be debited. So let's find out the supplies expense. Here it is. And then supplies would be credited with the difference in the amount. I just explained to you the calculation. That is, in the ledger we saw that supplies was 3,800, and right now our supplies is according to the problem it is 1,525. So 1,525. So the difference between these two is going to be 2,275. So this is the amount that we are going to put it here, 2,275. Now please understand, if the problem had stated that the supplies used was so and so, we would have used that amount like we did in case of insurance. It directly said to us that that was the expired insurance. But in these supplies we were given the balance. So sometimes even for prepaid insurance we could be given a balance. If that is the given, then we would be calculating the difference and finding out how much of supply insurance has been expired. Number C is with regards to depreciation. That is a straightforward one. So we'll do this. Depreciation expense would be debit. So let's find out depreciation expense, and then we'll be crediting the accumulated depreciation, and the amount is given to us as 750. So let's do that, 750 and 750. Okay. Once we have done that, let's go on to the next. That is number D. It says accrued receptionist salary on July 31st is 175. So whenever salary is accrued, that means it hasn't been paid, but it is an expense nevertheless. So that's why we'll be debiting first to salary expense and crediting to salaries payable because we have not paid that amount. So the amount is given to you directly 175. So we'll be putting that in the journal 175. And then let's go on to do the next. Number E is rent expired. So as soon as you're given the rent expired, that is the amount of rent expense. So let's find out the rent expense. Rent expense, and then of course we are taking that out of the prepaid rent. So let's find the, yes, prepaid rent, and the amount is given to you directly 2400. So that is all that we are going to do, 2400. Now the next issue is, let's go to number F. It says unearned fees on July 31st are 2,750. So unearned fees on July 31st are 2,750. So let's find out what was the unearned fees balance. So unearned fees balance is given to you as 5,500, and right now that is 2,750. So what we'll do is we'll subtract 5,500. So this will be 5,500 minus 2,750 will be 2,750 as such. So that's a tricky amount, but nevertheless we'll have to do that subtraction. So unearned fees has to be reduced. It is a liability. So when you want to reduce the liability, you'll debit it. And next will be the fees earned. So therefore, fees earned would be credited. That's revenue for us, and we'll be crediting that. So that is okay. So that's how we'll be doing this. Um, adjusting journal entry. Now what you have to do is, before we do anything, we'll have to go back and post these entries. Now the first thing is insurance expense. Now insurance expense, if we look at our question, we'll see insurance expense is 55 here, 55. So we'll mark that as 55, and we'll go to the ledger number 55 and post that insurance expense has been debited. So insurance expense has been debited. Now of course this posting reference is going to be number 3 because that was page number 3, and it was debited 375. So we'll be debiting 375, and the balance also will be 375. So that is taken care of, the first thing. Second is prepaid insurance. So let's find out what was the prepaid insurance. Prepaid insurance was number 16. So we'll have to go and find number 16 journal. So we write in the ledger folio as 16, and then let's go number 16. Number 16, 16, here it is, 16 prepaid insurance. So that was done on July 31st, and it was a credit, I guess. Yes, it was a credit. Let's see the journal, go back and see the journal. Yes, credit of 375. So we'll be crediting that with 375 prepaid insurance, and of course page number is 3, and this is 375. So that will give us a balance of 4,125. That is 4,500 minus 375. So we have posted the first adjusting entry. Let's go and see the second adjusting entry, that is supply expense. And supply expense was number 14. So let's write 14, and let's also find out what is supply. So that was supplies was 14, not supply expense. Supply expense was 53. So this was 53 and this was 14. So let us do the supply expense. Let's go to the ledger 53, 53. Yes, supply expense, and then find out that it needs to be debited. So supply expense is debited, and of course this is 31. In the item I should be writing adjusting. I don't know whether I wrote it before or not, but now make sure that I write it. And number three is debit of 2275, and therefore the balance also will be 2275. So that is taken care of. Now what I need to do is, wherever I posted that 31 from journal page number 3, I need to write adjusting in the item reference. So before I do that, let me complete the supplies. One supplies is of course 31, and of course I'll have to write in the item column adjusting, and then it was a credit. It was a credit of what amount? Credit of let us say 2275. So 2275. So that will give a balance of 1525 here in the supplies account. So let me find those entries that I made out of page number 3 and write adjusting here. I had missed that adjusting. There was a prepaid insurance, and let me see another place. I think it was insurance expense or something like that. Okay, here it is. I should be writing adjusting. Okay, and then that's all we have done so far. Okay, now number third, that is this is, I'm calling this as A, B, because that is the reference given in the problem. D, E, and F. Okay, so the next is number C, that is accumulated depreciation and depreciation expense. So let us find out depreciation expense. What was the depreciation expense? The depreciate accumulated was 19, so I'll write 19 here. Okay, and then depreciation expense was 54, so let me write 54 here. Okay, this is 54. All right, now I go to 19 and credit it. So let's go to the, yes, let's go to the ledger. Find 90 depreciation expense. I am just about here, so I'll just write this is 31, and then I write it as adjusting, and then posting reference will be page number 3, and then it was a debit of 750, and then of course the balance also will be 750 on the debit side. So that is depreciation expense. Let's go and find out accumulated depreciation. Okay, accumulated depreciation is here. So July 31st, in the item I'll be writing adjusting, and then posting reference will be page number 3, and of course it was a credit of 750, and then of course the balance also will be 750. All right, so that is how I handle that journal number C. Let's go on to do the D. D part is salary expense is 51, and salaries payable is 22. So let us go to the ledger and write that 51. Here 22 is just here, so let's finish that. 31, and this is adjusting. and its posting number 3. Salary payable was a credit of how much? Credit of 175, and then of course this also will be a 175 credit balance, so that is taken care of. Now let us go and find out the expense. Salary expense was 51, so here it is. So this is 31, and I'll write adjusting, and then page number 3 of the journal, and it was a debit of how much? Debit of 175, and therefore the new balance is going to be 3675. Okay, so that is how I will handle that. Now that's taken care of. Now let's take the other journal, that is the rent expense. Rent expense is 52, and then prepaid rent is number 15. So let's go to the ledger, and 52 is right here, so this is going to be 31, and I write adjusting, and posting reference is number 3, and it was a debit. Rent expense was, I guess, a debit of 2400, wasn't it? Let's check the journal. Yes, it was 2400, and the balance also will be 2400 on the debit side. So that is going to be how we handle that. Then next, we'll have to post it on prepaid rent, that is 15. So let's find out number 15. Here it is, 15. So July 31st, and write adjusting in the item column, posting reference column number 3, and it was a credit to the prepaid rent, credit of 2400. So therefore the balance will be 2400 as well. So that is how we'll handle that number 15. So prepaid rent is taken care of. Let's go back to the journal and see. Unearned fees is debited. Unearned fees here is 23, and supply expense is, how come we have unearned fees and supply expense? That should be fees earned, not unearned fees. Supply expense, that is, yes, it is, because, okay, so probably yes, one step. Okay, so fees earned, so in this case the fees earned is 41. So now I go to journal ledger page 23, journal page 23, and then post that. So let's see the 23, here it is, and right here as 31, and this is your adjusting, and page number 3, and unearned fees was a debit of 2750, therefore the balance would be a credit of 2750, because this was a credit and we debited it, so we reduced that amount. Now next is the fees earned. Fees earned was 41, so let's find out 41. Here it is, so that is 31, and item will be adjusting, and then page number 3, and here in this case this is going to be a debit. No, it was a credit. Fees earned was a credit of how much? It was a credit of 2750. Yes, so therefore the new balance will be 44,350. Okay, so that's how we handle that journal. Now we are done with all the adjusting entries. So once we are done with all the adjusting entries, we have also posted them. So now what we'll do is we will be putting them in the worksheet. So let us put those transactions in the worksheet. So when we go to the worksheet, let us see, here it is, worksheet. And in the adjustment, what we are going to do is there was no adjustment in cash. There was no adjustment in accounts receivable. There was an adjustment in supplies. So supplies was credited. So let's see the, okay, I need to see the journal. So journal is supplies was credited with 2275. So I'll write number B 2275, and I need to find supply expense here. This is B 2275. Okay, I'm coming from the top, so that is why. Next is the prepaid rent. Prepaid rent was a credit of 2400, so let's put that. That's number E. So number E was prepaid rent 2400, and then of course it was a rent expense. Yes, rent expense number E was 2400. Okay, now let us see the next is prepaid insurance. There was a something, yes, prepaid insurance was number A. So prepaid insurance was a credit of, how much was the credit of 375, and insurance expense was debit. So let's write here A 375. All right, now next thing that we'll do is we have taken care of A, B, C. C was with regards to accumulated depreciation. So let's do number wise. I think that's easier. Number C here, depreciation expense, and depreciation expense was 750. Let's find accumulated depreciation. Here it is, number C, and 750. And then let's see number D. Number D was a salary expense and salary payable. So number D was salary expense. Oh, where is, here it is, salary expense number D, and the amount for salary expense was 175. Yes, and then salary payable was here, number D, 175. Okay, so we have done that. Now let's see the journal again. Rent expense and prepaid rent, I think we already did. Yes, so we're left with number F. Number F was unearned fees was debit. Unearned fees was debit here. Debit of unearned fees was debit of 2750, and fees earned was a credit. So this is fees earned. So number F 2750. So I guess we have already completed the postings of these. Now what we are going to do is we are going to add up whether we get the same total for these adjustments or not. Yes, 8,725. Let's see this one. This one is also 8,725. So we have done the adjustments correctly. Now the next thing that we do is we find out the total here. Adjusted trial balance. Cash, there is no adjustment, so that's why we'll just bring that 32,450. Accounts receivable, no adjustment, 16,450. But supplies, there was a reduction in the supply, so this is going to be 3,800 minus that will be 1,525. And prepaid rent was a debit here and a credit here, so we need to subtract the two and we'll get 2,400. And prepaid insurance, of course, this is a debit here and a credit here, so we'll be getting a debit total, but we'll have to reduce that. That will be 5,125. That is 4,500 minus 375. Office equipment, no change, 14,000. And then accumulated depreciation is just a credit, nothing was here, so we'll be writing on the credit side 750. And then accounts payable, no adjustment, so on the credit side, because this is credit, so we'll bring it straight away here. Salaries payable, nothing here, so we'll bring that 175 straight away here. Unearned fees, this is a credit and a debit, so we'll get a credit total because the credit is higher than this debit, but we'll have to take out the difference. The difference will be 2750. That's 5,500 minus 2750. Capital, no adjustments, 45,000. Drawings, no adjustment on the debit side, 12,500. Fees on, this was a credit as well as a credit. So we'll have to add these two. This plus, what did I do that? That will be this plus this one will give me 44,350. And this one is going to be no change. Yes, this is a debit because there was a debit here plus a debit here, so that will give a debit total of 3,675. Rent expense 2,400 on the debit. Supply expense 2,275 on the debit. And then next is depreciation expense debit 750, insurance expense 375 debit, and then miscellaneous expenses 1,400 debit. So let's sum them up. Okay, if we sum them up, we get 94,325, and 94,325 should be on the credit side as well. Yes, we get the same total. So we have journalized the adjusting entries, and then we posted these adjusting entries into the respective ledgers. Then we completed the worksheet. Now what I can do is I can use the information from the worksheet and then complete the trial balance, that is the adjusted trial balance. So the adjusted trial balance, of course, is going to be, how do I do the adjusted trial balance? Just copy that information from the worksheet. So starting with 32,450 for cash, 32,450 for cash, 16,450 for accounts receivable, 1,525 for supplies, 2,400 for prepaid rent. Prepaid insurance was 2,000. Yes, it was what was prepaid? Okay, prepaid insurance was 4,125. 4,125. And then office equipment was 14,000. Accumulated depreciation on the credit side was 750. Accounts payable was 1,300 credit. Salaries payable 175 credit. Unearned fees was 2,750 credit. I'm bringing all these from the worksheet I've just completed. And then drawings was the debit 12,500. Fees earned was 44,000 something. 44,350. So 44,350. Salary expense was 3,675. 2,400 was the rent expense. Supply expense was 2,275. Depreciation was 750. Insurance was 375. Miscellaneous expense was 1,400. And I think I got a total of 94,325. So that is okay. 94,325, and here also I should be getting the same total, 94,300. Okay, I got that. Now you may wonder why I'm doing a trial balance separately and the worksheet. I have already completed the worksheet, but please remember, I have been telling you worksheet is only a scratch pad. We want to see everything in there. That's why we are doing it. We are not required to do it, but this adjusted trial balance is a requirement. We'll have to do it. So that is why it's important that you remember that. Okay, once we have done the trial balance and the worksheet, now what we are going to do is we are going to go back and see what is the next step. We have done journalize and posted the adjusting entries. Now we prepare the adjusted trial balance, and from the adjusted trial balance or from the worksheet we can prepare the financial statement. So let us go to that step. So in the worksheet, what I'm going to do is these are the income statement and balance sheet columns. All these items in the adjusted trial balance you have to either take to the income statement or the balance sheet columns. Now all assets, liabilities, and owner's equity will go to the balance sheet. Revenues and expenses will go to the income statement column. So let us take all the balance sheet items first here. So this is going to be starting with this. So I will be copying these till the drawings amount. Okay, so this will be then of course here also the same thing. Everything that's in the trial balance, it should go to the same side. That's why I'm taking to the credit side, and it should be till here. Okay, because till here this is all assets, liabilities, and drawings account. So these are the balance sheet accounts. That is why I'm putting them in the balance sheet columns. Now these remaining, that is from the fees earned below, these are your income statement items. So that is why what I do is I will be taking them to the income statement. So let's take to the income statement. There is only one item on the credit side, that's the fees earned. Then everything is on the debit side because these are expenses. So I'll be drawing this down here. Okay, now what we do is we add up and find out the total. So what would be the total? Of course this one, let us auto sum it. This total is 10,875. This is 44,350 because there's only one item. And this one, of course, if I add up, that's going to be 83,450, and this one is going to be 49,975. Now please remember that in the income statement your revenues are more than the expenses, therefore we'll have a net income. So it could be a net loss if this was more. Okay, so now in this case let's find out what is the net income. This is going to be 44,350 is the revenue minus all the expenses of 10,875. Therefore my net income is 33,475, and I just make a total 44,350 because if I add this and this, these two figures, I'll be getting that 43,000 44,350, 44,350 here. So the two totals should be equal. Now in this case also, please understand, if you have done correctly everything, your difference between these two should be the same, 33,475. Why so? Because that 33,475 belongs to the owner in a sole proprietorship. Therefore it should go on the side whichever is the capital. So capital is on the credit, so therefore it should be on the credit, 33,475. Now if you add these two, do you get the same total or not? So that is 83,450. Yes, 83,450. So that means we have done that correctly. So now what we are going to do is, once we have set out the information in the worksheet, we can go ahead and do the financial statement. So let us do the financial statements. First, what I'm going to do is I'm going to take the revenue. There was only one revenue, that was fees earned, if you remember that. So fees earned was 44,350. And in these expenses, what I'm going to do is I'm going to start with the highest expense. So if you go to the worksheet, our highest expense was the salary expense. So I'll be starting with the salary expense. Amount was 3675. And then next highest was the rent expense. So let us see the rent expense. Rent expense amount was 2400. Then next was the supplies expense. So let us see the supplies expense. Here it is. And that is going to be 2275. And next is going to be depreciation expense. So depreciation expense is 750. Although 1400 is the miscellaneous expense, that is greater than depreciation, but I have said to you, you will be listing all expenses in the descending order, and the last item should always be the miscellaneous expense. So that's why we are not putting it here. Next is the insurance expense. Insurance expense was 375. And the last one is the miscellaneous expense. Miscellaneous expense was 1400. And we already know our total expense was 10,875, because in the worksheet we had calculated these as the total expense. So 10,875. Therefore, your net income is 44,350 minus 10,875 will be 33,475. We have already calculated that in the worksheet, so we know that is the correct net income. Now we go on and prepare the statement of owner's equity. Because this is a new business, the starting capital was 0. And then next we'll be taking the additional capital. Additional investment during the year, during the month, was 45,000. So we add that, and then of course we add the net income. So the net income was we bring that amount here. So this is going to be 33,475. So we add the total. So this will be 37,975, and we subtract the drawings less withdrawals. Withdrawals amount was 12,500. And now this is going to be, of course, increase in owner's equity, because our increase is 37,975 and decrease is 12,500. So let's see what is the net increase. This is going to be this minus this one will be total minus the withdrawals is going to be 25,475. And then the capital is going to be, of course, our beginning capital was 0, plus the increase right now was 25,475. So that would be 25,000. This was 45,000. So yes, there is some calculation. Okay, the total will now work out to be, additional investment was 45,000, not 4,500. Net income was 33,475. Total was 78,475, and drawings was 12,500. So therefore, net increase in the capital would be 65,975, and that would be the end of 0 plus 65,975 will be the ending capital. So Steffi Lopez capital, that is the amount. So we'll be putting that here, 65,900 and 65,975. So now what we are going to do is we are going to populate our current assets. Now current assets, of course, usually it starts with cash. And cash amount, if you see the worksheet, the cash amount is 32,450. 32,450. And then next is the accounts receivable. So let's see, accounts receivable. Accounts receivable is 16,450. And then next is the supplies. Supplies, okay, supplies is 1,525. And then next is your prepaid rent and insurance. So let us see the prepaid rent. Okay, and then prepaid insurance. There's no order, but prepaids are usually put as after the supplies. So the prepaid rent was 2,400 and 4,125. So these are all your current assets, and if you add the current assets, we'll be able to calculate them to be 56,950. Property, plant, and equipment, we have only one, that is the office equipment. And then whenever we take the office equipment, we'll have to show if there was any depreciation. Yes, we had accumulated depreciation. Let's see, I don't remember the accumulated depreciation amount. That is 750. So let's take the 750. That will give the net office equipment to be 13,250, because office equipment was 14,000, accumulated depreciation was 750. So that will give 13,250 as property, plant, and equipment. Now if there were others, we would be adding them internally and writing the total here, but there was only one property, plant, and equipment, so that's why we are just straight away writing a total of the assets. The two assets, total current assets, we had calculated 56,950, and property, plant, and equipment to be 13,250. So that will give you 70,200. Now let's go on to the liability side. Liability side, if you check your worksheet, there are accounts payable, salary payable, and unearned fees. Three things in the liability side. So let us take them one by one. First is the accounts payable. Amount is 1,300. And then next is the salary payable. Salaries payable, here it is, salaries payable was 175. And then unearned fees, was 2,750. So if we add them up, we'll be getting 4,225. Let's check the unearned fees. Was it unearned fees was 2,750. Okay, so now that's the total liabilities, because we don't have any long-term liability. If we had, we would write them down here and then add up the two, current and the long-term, and write the total liabilities. Now if you add these two, we should be getting same total of 70,200 we got on the asset side. So let's add 4,225 and owner's equity of 65,975. That gives us a total of 70,200. Okay, so now what we have done is we have completed the financial statements. We prepared the financial statements. Now if we do, the next thing that we are supposed to do is journalize and post the closing entries. So we'll be doing the closing entries. Let's go back to our journal. This is page number 4, closing entries. Now in the closing entries, remember, we'll be doing only 4 closing entries. Now the closing entries that we'll be doing is first to close the revenues and close the expenses, and then close the income summary. We'll be using income summary to close the revenue. Revenue is a credit balance account, and if you want to close it, you should be debiting it, and income summary would be credited. So let's debit and credit. Now fees earned, of course we already know that was 41, reference, and then somewhere here we are given income summary was page 34. So when we are posting it, we know that. Now the fees earned is 44,350. 44,350. Okay. Now what we are going to do is we are going to close all the expenses. To close the expenses, I need to credit them. So what would I debit? I have nothing to debit, so I'll be debiting income summary account. And I'll be crediting all the expenses one by one. First would be the salary expense, and then um, let's see, salary expense. Okay, I don't see the salary expense somehow. Let's see the other expense. I have depreciation expense. I have insurance expense. I have rent expense, and I don't seem to have I don't seem to have miscellaneous expense. So let me do the drop down is not working. So what I will do is I will just clear that. Okay, so this is taken care of. Any value. Okay, so would be the salary expense, and then I would have to do the same. um, Data valuation. Okay, any value, and then okay, so next is the miscellaneous expense. Okay, so let's find out what is the depreciation expense. Depreciation was 750. Insurance was 375. Rent expense was 2,400. Salary expense was 3,675. Miscellaneous expense was 1,400. So have I taken all the expenses? Um, okay. I think I'm left. I have one more expense that's taken to be. That's the let's see, supply expense. Somehow my format has messed up. Supplies expense, and the amount for the supply expense is 2275. So I think I have all the expenses. So let me add all those expenses. So if I add these supplies, okay, so that is 10,875. And now since the income summary will have more on the credit side, I need to debit it to close it. So that's why I'll be debiting income summary and crediting the capital. Of course, another way of looking at it is whenever there is a net income, capital will be credited to increase it. So that's why we'll be crediting. And here we know that we calculated our net income of 33,475 and 33,475, and that is your number 3. And the last one is we'll be closing the drawings account will be closed by transferring to the capital account, and that will be of course 12,500 and 12,500. Okay, all right, so that is how I'll do the closing entries. Now what we are going to do is we are going to post all these. So the fees earned is 41. If you see your problem statement, fees income summary was 33, and then income summary again is 33, depreciation expense is 54, and then next is insurance expense is 55, and then rent expense was 52, salary expense was 51, and then miscellaneous of course was 59, and then next is supply expense was 53. Now, of course, it would have been better if we had written the miscellaneous. I already wrote it, so I don't want to go back and change it, but that's how we would be doing it. Income summary is again 33, and capital was 31. Capital is again 31, drawings is 32. So we'll be going to all these accounts and then posting them. So let us go to the ledgers. Okay, first we are already in the fees earned, so let us do fees earned on 31. This is closing, and this is page number 4, and I will be debiting it with 34,350, and this will be a credit of 44,350 minus a debit of 44,350. So that'll give a zero balance. So I have zeroed that out. So you can see there is no balance left in that. Now I go to the salary expense again. 31 salary expense is closing because all expenses have to be closed, and salary expense has was credited with 3,675. Now we get a zero balance here. So that is how we'll be closing the salary expense. Rent expense, again, this is 31, and here I'll write closing and page number 4, and this is going to be a credit of 2,400, and therefore this will be zero, and I have zeroed out that account as well. Next is the supply expense. Supply expense will be closing page number 4, and a credit of 2275, therefore this will be 0 and balanced out as 0. Okay, that's supply expense. Depreciation expense also the same thing, 31. This is closing, and page number 4 of the journal, credit 750, this will be 0, 250, 750 minus 750. Insurance expense, again that should be closing, and page number 4 of the journal, a credit of 375, so that will give a debit balance of 0 because we had a debit and we just credited with 375. Miscellaneous expense, it was page 4, and a credit of 1400. Now debit 1400 minus credit of 1400 will give us 0, and we have zeroed that out as well. Now next thing we need to do is we need to close, we need to take information to the income summary. So this is 31 income summary, this is closing, and posting reference is out of page number 4. First we credited income summary with 44,350, so it will have a credit balance of 44,350, and then we did again another closing entry, page number 4 of the journal. We debited it with 10,875, so the balance will be 33,475. And then next closing we did again on 31 by transferring it to capital account. So there was a income summary debit of 33,475, and this got a zero balance because we closed it. So that is also taken care of. Now we are going to do the drawings account. In case of a drawings account, we did a credit of closing credit, this is page number 4, and a credit of 12,500, and this is 0, so that will be how I will be closing it, and that is taken care of. Now only thing that's remaining to be done is the capital account closing entries. This is closing. We did closing entry by crediting capital with the income summary, page number 4, credit of 33,475. So the balance will be 45,000 plus 33,475. And then next closing was a transfer of drawings account. So that will be again closing, and page number 4, debit of 12,500. And this will be, of course, 78,475 minus 12,400. 500 will give you 65,975. Now we have finished what you call posting the closing entries to the ledger. So our ledgers are complete. Only thing that is left to be done is the post closing trial balance. Now in the post closing trial balance, you will be having only those items that appear in the trial balance sheet. So the cash would be 32,475. Accounts receivable is 16,450. Now what we are going to do is looking at these ledgers. Cash is 32,475. Accounts receivable 16,475, and then supplies is 1,525. Prepaid rent is 2,500. So that's how we are going to put those 2,400 and 4,125. Office equipment is 14,000, and then accumulated depreciation is 750. 1,300 is the accounts payable. Salary payable is 175. Unearned fees was 2,750, and capital is 65,975. So that is all, and then the total is 70,950 and 70,950. So with the post closing, because once we journalize and post close and then prepare the post closing trial balance, we have come to an end of to that problem. So that is how we'll be doing. So we have complete journals, page number 1, 2, 3, 4. Then we have ledgers, and then we have 3 trial balances. We have the worksheet, and we have the financial statement. So we have completed the problem, and you are expected to do the same way. Thank you very much. Hope it will be useful to you to solve the homework problem.